Hi, this is Randy Finney with Right Side of the Chart. This is a closing market wrap for Tuesday, March 3rd, 2020. This will be my third and final video of the day. I do realize that videos can take a little while to watch, especially if you're working, have other things going on. So what I'll try to do is include some of these charts below the post on this video so you can quickly reference those. And again, the videos allow me to convey my thoughts. This stuff is not black and white. There's a lot of moving parts. So let's dive into the charts here and take a look at QQQ. We'll start out here on this weekly time frame. Okay, we had this trend line just loop back to 2018. This trend line broke. We had a major correction there. And if you see if I extend that trend line, and we can play around with it, kind of put it right up under the bottom of those candlestick bodies. You see right there. That's what I did now to tighten it up. When I say tighten it up, you can see here it captures. There's that major reaction low back in 2015, and reaction low there. Reaction lows. The 200-day, you can see, you can't even see it here because it comes in so perfectly with that trend line, and both of them acted as support. And then when they both went right there, that was a major sell signal in the market. And so what I did, I extended that trend line. So bigger picture, longer term stuff, and that's what I'm starting out with here because I know I've kind of focused largely on the 60-minute charts recently, including today. But bigger picture is this, breakdown of this long-term trend line and a back test. Took a while, but again, these are weekly charts. These can play out for quite a while. So okay, so that happened. Then we had this minor trend line break here. That was the one off the that came off the that's September, the week of September, Friday and week ending. I'm sorry. Friday, September 27th, because these are weekly candlesticks right there. Nope, October, what am I doing? October 3rd. That's the same trend line right here, the one I was harping on for a long time, October 3rd. I knew something was wrong. I had the cursor moved over there in September. I'm trying to remember what trend line started in September. So there's the big one. Off the October 3rd lows I was highlighting recently, broke down, big gap down, and then we came in and hit the secondary trend line the other day. I focused on this on the daily chart, which we'll get to in a second. And if you recall, so we had a successful defense. No, that would be at the low. No, that's a different one there. Sorry guys, that's not the one on the daily. I can see the one on the daily right here. I don't have it on the weekly. So there it is. That's the other one there. But there is this one right here off the October 5th or December 24th lows as well. And that we came in, you can see on Friday we had an intra-period break to close the weekly candle back on it, and today we started to rally, but we closed right on it. So from this chart, we still have, again, there have been sell signals with some trend lines broken, but the way it works usually is that the longer the trend line and the more reactions, the more significant it is. So in other words, this is a shorter term trend line. Typically a break of that will give you a shorter term sell signal versus a longer term trend line breaking down. But they're all support levels, and I like to say this, that some traders might have been watching this one, and some might be watching this one, some might be watching this. So they're all relevant, worth pointing out. And of course you have the 200-day moving average, which on this weekly chart is shown as a 40-week moving average, does a great job of defining the trends. We're still above that. So just to summarize, on the weekly charts, we have a big, powerful weekly candle, and you can't spin that as anything but good. But on the flip side, the primary trend is still bullish right now, and we held this trend line support, and we've held the 200-day so far. Remember, it was tested on Friday and recovered on that same 40-week moving average, and we're above it now. We do have, giving you a lot of, I won't call it conflicting analysis. I'm just pointing out what's in the charts, and then you can determine, what you want to factor into your analysis. A clean high-level bearish PPO crossover. There was our last bearish PPO crossover. It came about right here. It was proved to be a whipsaw signal, but there was one right there. We had a bearish PPO crossover, and so those are things you look for as well. We also were coming off overbought, extreme overbought readings, just like right here, and you had a big drop followed by another big drop. So that's what's there, and we could go down. So I think we're at a pivotal point. Obviously, I would have added the QQQ short today if I didn't favor more downside. I'm just pointing out levels to watch. And again, you may take a completely different view of this market. You may say, wow, 50 basis point cut from the Fed, we're going to rocket higher, go to all-time highs. Maybe that is the case. And so I'm showing you levels that you can step in and buy Whereas those that are, instead of the glass half full outlook, they're the glass half empty outlook, levels that you can short or add to shorts if they break, and that's it. So this 195.72, that roughly aligns, I think, with that downside target for the current QQQ short trade. Let's jump over to that. So let's get to the daily time frame. Again, there's been some technical damage done recently, and then some other levels that will either hold or cause further technical damage. On the daily chart, I kept this one very simple. By that I mean I had one price target. The entry was, when I screenshot, I get out to you guys as quick as possible. We were right here about 12.57. So we closed down a little bit. That one's, 1.5% or so profitable. I forget exactly. I'll have to do the math. It doesn't matter. There's, I'm looking for a longer term swing trade down to that level right there. And again, that target was set, as I said in the in the post today, this level here, pretty big level. And what you have so far is a move down, successful defense of both 200-day, the EMA exponential moving average in red, and then if you can make it out, that blue line is a 200-day simple moving average. Reverse, bounce right back to resistance. Remember, that's where the our final target was set, right around there on the last long trade. And again, based on what happened today, my views, I'm sure, differed with the masses. Maybe now, well, obviously in hindsight, people are scratching their heads and saying, what's going on here? Fed just came in and juiced the markets with a 50 basis point cut, and yet we closed down 3.2% on the Qs. Again, because that was my interpretation, of more of a desperation move, and using up a lot of their bullets when they don't have many left. B, what's wrong? What does the Fed see? The market was recovering, and like I said, it sounds odd maybe to some, but I would have been a little more bullish and looking for more upside had the Fed not come in and done that. So again, it just hard for me to explain, gut feel, intuition, experience, but I think at the timing of that cut, well, so far it's obvious, the market didn't like it. So right or wrong, today that proved to be the right call, that it was not a good thing for the Fed to come in and cut 50 basis points. They should have just let market forces go, and maybe stepped in at a more strategic juncture when it needed it. But I think they stepped in at the wrong place, if you ask me, and wrong time. Okay, so we'll see what happens. All right, to stick with that, I told you in the earlier video today, we do have the PPO signal line, the 9 EMA, which is a pretty good trend indicator. Flipped to bullish when it crossed the zero line back there, and it's remained bullish. So we're right there now. So pretty much today will be, they kind of left us guessing a little bit. Now, obviously, the Bears win today. If you want to play that game day by day, who won today, Bulls or Bears? Bears won if they took the market down 3.2%, especially in light of the an FOMC emergency rate cut, or that's what they refer to it as, when it's an intermeeting rate cut. So that's that, and now it's not over yet, but looking good so far. We'll just leave it at that. I'm not waffling on my take. I just want to say we'll need to see a little more work. Let's look at the 60-minute chart. Because here's what we're at. If we strip everything away, here's the rally off the highs right there. We bounced, as I showed you the other day, or earlier today, we hit about a 50% retracement, and we also ran into resistance there at the highs as well. It's off this chart now, but we hit that resistance, that second target level yesterday, and we reversed. So the big question is this, as I suspect it is, just a counter trend rally, this right here off the lows, in a deeper correction with more downside to come? Starting to look that way, and again, as I said, we'll know if and as we start to approach this low. As I think we'll probably get more and more panic selling, more and more stops hit, and then come on down there and go on to hit our target. But with that being said, when you look at this, it's too early to say, just because we had a reversal, that this isn't just the first leg down. Even if we're just getting an ABC correction, market goes up, that's a counter trend rally, A, B, C. Counter trend rallies typically come in 3 waves like that. They don't have to, but that's a possibility. So the market's going to keep us guessing into tomorrow. I don't see any reason to change the trading plan. Like I said, the stops on this one were set tight. Up to you if you want to lower stops at this point to protect profits or at least assure a break even, or give it a little room, and instead of trying to hit a single or double, swing for the fences down here, maybe hit a triple or a home run. I mean, if things really break, take out the 200 days. Can't rule it out. I don't favor that right now. Like I said, I'm favoring a move down here, 195.35. Maybe we overshoot it a little. And remember, the actual support down there is a little lower at 194.90. I like to cover a little early, and that's about it. So those are the things to watch for. Watch for more downside. We'll get a bearish crossover on the PPO, or a move down below the zero line. We may get that divergent low that I was talking about on the 60-minute chart before. Oh, there it is. The line's just populated. So a lot can happen. What did happen today is the PPO is starting to curl down. Remember, I use that signal line, 9 EMA. It's a trend indicator. Above or below this zero line denotes a bullish or bearish trend. Trend has been bearish since right here, and the zero line often acts as support or resistance when tested from above or below. And you can see the PPO line, the blue line, curling down, poised to make a bearish cross. It hasn't made it yet, but if it does, and you start to move lower, that's going to keep the trend, bearish trend, intact, and it's still intact for right now. So that's it. And what I mean by the bearish trend, we're on a 60-minute chart, so then we're talking the intermediate term trend. So what you have here, intermediate term trend, short-term trend right now is still bullish at this point in time, but the intermediate term trend is bearish. So maybe that short-term trend has run its course, maybe not. Longer-term trend, when you go to the left of the chart, you look at the daily, weekly charts, we're not far. I mean, we dropped quite a bit percentage-wise last week or two, but we're still relatively close to the all-time highs, especially compared to the bottom of this bull market. So that's what I'm talking about. And I do that so I don't confuse you when I say, talking about a trend being bullish or bearish. You have to define what time frame. So there it is. What else? Let's talk about NASDAQ, and then I'll get to IWM and SPY here in a second. NASDAQ just traded like a champ today, the NASDAQ 100 futures. And this is really, where my focus is, because the levels have been a little more clear. I know a lot of you don't trade futures, and I understand that, so that's why I go over the charts of QQQ and SPY, try to give you comparable levels. But what we have here is a lot more reactions, trend lines and support and resistance levels to identify. And the traders have been really stepping in at these levels. As I mentioned in the video earlier today, I posted at least three, maybe four different day trading ops in the trading room. Short from the top of the zone here to cover here to bounce up to there long, and then to go back short and write it down. So yeah, 1, 2, short, a long, and another short, which still all of them played out. And the fact, this is what I wanted to get to here, there's that bearish rising wedge I highlighted earlier today before it had broken out, and now it has broken out. There it is. 60-minute bearish rising wedge complete with the negative divergence, which has certainly been confirmed. That trend indicator still above the zero line, the PPO signal line, but we broke down, and we broke down impulsively, so that is what you want to see to confirm a sell signal. And what we're looking at right now as I do the video is possible flagging action in the futures. So let's see what happens tonight. What we have here is this impulsive move down today. As soon as there was the pop on the FOMC rate cut, there was the fade right there, that impulsive leg down. That's our flagpole, and this is a bearish pennant or bear flag pattern potentially. What will confirm that, or help to confirm it, an impulsive breakdown below the flag, especially below the recent low. And you can see where we bounced today. I have had this level on my chart for a while, 84.90.79, so I call that 84.91, and NQ reversed just shy of it today. You can see why that level was there. It was it was a decent support and resistance level before. Broke above it, shot down, but then went through it. Enough reactions there to validate it as a, call it a minor support level, but certainly came into play. And then look at the bounce right back up to that 8701.51, or we'll call it 8700 resistance level, provide an objective short reentry or new short entry. That's TA 101. You either cover when you're short, you either cover on pullbacks to support, or break a short break of support, or you wait and get it bounce back into resistance and then short there, and that's how it works. So we'll see. If we pop up, you still have the back test of the trend line, to contend with. If we do pop up and follow that flag, that trend line could act as resistance from below, depending on where we hit it. Otherwise, if we get a break of the flag, that should, by the measured target, if it plays out, and you count from the highs there on the fade, that could take us all the way down here to come in and retest these lows from Friday. And like I said, if you get down there, markets are going to be a little jittery. So anything's possible. Oh, here, one more thing to point out that I just noticed. If that happens, all right, let's zoom out here a little bit more, come back in. Okay, here's our primary downtrend line from the highs, right? This is a 60-minute chart, and we've had this downtrend line, which was broken here, breakout, back test with a little whipsaw move below, but then we moved up, and it's kept this uptrend intact so far. Like I said, the near-term uptrend, a series of higher highs, and there's your higher highs and higher lows. So far, that's intact. So like I said, we can't get too excited about the short trades right now. Be a little more excited when we go to take out the previous reaction low, and especially these lows down here. Now, where I was going with that is, let's just say that bear flag plays out tonight, and maybe into tomorrow. We come down, measure target would take us around those lows, but look what happens. There's that trend line off the highs, and we could get a back test of that trend line, which might act as support. So that's something to watch right there. So maybe we come down and test or come close to the lows. I've seen this happen in similar situations where we get close to the previous lows and we don't just melt down. So I'm not sold on that. I've seen sometimes you come in and reverse just shy of the previous lows, and that's it. And then off to the races, and the bottom is in, and the next big rally starts. So I'm not trying to confuse you and throw out all these conflicting scenarios, but again, if I'm not showing you the levels to watch and what could happen, I'm not doing my job. If I sit here and tell you with the highest degree of confidence the market's going to drop or the market's going to rally, anybody that does that, one bit of advice I'll give you: run. Don't walk away, but run from that analysis. Nobody knows with certainty what the market's going to do. Market's going to do what it's going to do. What I can, try to do is show you the levels that will likely dictate where the next move goes, if and when those levels are broken, or if the buyers step in at those support levels or resistance levels to the upside. So that's it. Like I said, I'll watch to see what kind of price action goes on if and when we even get here. First things first, we got to make it through tomorrow and tonight. Let's see if we can build on these losses. Like I said, the more we go down, the more it's going to chip away at the bullish case, and maybe especially if this uptrend that we have going right now, this very near-term uptrend, it starts to be called into question, breaking down below these previous reaction lows. And I'm going to give you one more level before I move off this. If you want to replicate the chart that just jumped out to me, is right here, about 87.74, 75. What I see there is you had some reactions here, and then it was resistance. We moved through it there, but then we came in and back tested it right here. So there's a recent reaction low as well. So there's a couple levels for you to watch. And that's all kind of micro stuff that plays into the longer term stuff, because if and as each of these support levels are broken, it will further increase the odds that we're going to go down and hit that swing target on QQQ. Likewise, if we start to move up, and the resistance levels that should, quote unquote, send us back down lower, if they're taken out, especially today's highs, that's going to open the door for a move up to these additional resistance levels. So that's still my preferred scenario, and that may change by tomorrow, and if it does, I'll communicate my thoughts as soon as possible. Quick look at the S&P 500 weekly via SPY, the tracking ETF. Here's one version of the weekly chart that shows you big divergent high right here, trend line break with that big red impulsive candle. I mean, very convincing. Like I always say, on a breakdown or a breakout of a chart pattern or trend line, you want it, the more impulsive the better. It increases the odds that a breakdown will stick. And because this is a weekly chart, a breakdown like that usually doesn't project for 1 week of selling. It usually projects or indicates a trend reversal that's going to last several weeks or more. And so again, I'm going off that the theory that this was a pretty significant sell signal here on the S&P 500, and that counter trend rallies aside, there's probably more downside to come as of now. Daily chart, there's a SPY right here. Remember, divergent high right there, and boom, impulsive leg down, snapback rally so far, and then 60-minute chart. That's that level right there, the 309.57-ish to 310.65-ish resistance so far has capped this bounce. And so that's the level to watch now. So if you're looking for what may foil this short trade or open the door for more upside if you're long or looking to get long, I think a break over that resistance zone. We popped it today on the Fed announcement, but we couldn't hold that and closed right back down on it. So technically that wasn't a breakout. It was an interperiod whipsaw signal or an interperiod pop with a 60-minute candle. All four of these, 1, 2, 3, 4 consecutive candles closing there, meaning we failed on every attempt on the 60-minute chart to get above that level, and then fell back. So if the markets can power back up and get on through there, good for the bulls. It opens the door to these next targets, possibly any of or all of these. However, so far it's a failure there, so let's take it on face value, and the next step is to break today's low. I had a big old gap right here that about 297.50. That was a significant gap right there. We back tested the gap there, or that gap support, I should say, the top of the gap. And so a move down below that should open the door to more downside. And these flags don't seem as clear right now on the 60-minute charts. Let's look at the 15-minute charts of the indexes. Oh, that one's a mess. Let's clean up here. Yeah, there you go. Here we go. We can zoom in a little like this. And here I'll draw that similar flag type action. Not crazy about the angle of that downtrend, but there's a little bit of flagging action. Looks like we're breaking down now in the after hours session. Let's see what it looks like on the QQQ 15-minute. Oops. There it is. So we zoom in a little tighter. Here we go. Got a ton of different boards here. Ignore these other lines there. There we go. Bear flag, flagpole. And should that play out, we take a measured target, take the distance of the flagpole, add it to the highest point of the flag, which seems to have just broken down. If that pans out, and again, like I already showed you on the futures, that'd take us down around near the recent lows on Friday. And if that plays out. So far, it's after hour session. Don't put too heavy a weighting in this right now. Positions are getting squared away. When you have a big move in the market like today, the mutual funds, ETFs, they're squaring their positions away. That means with inflows and outflows, and they've got to rebalance to match the index that they're tracking or whatever sector, if it's a sector ETF. And just a quick update on IWM. It looked promising the other day, and it was. We got a nice bounce off that bottom, about 145. Remember, that's that multi-year trading range that we've been in, other than these two brief instances when we were below and above it. That's where it spent most of its time bouncing between. It was there the other day, and that was good for a pop. I identified a potential target here in the middle of the trading range, about 152 right there. So from 145 to 152, it popped a little bit above that, but never closed above it. It was good for about almost a 5% pop, but now we're back down in the bottom part of the range. So that's it. I can sit here and talk about these levels all day long. We've seen bearish price action lately. Yesterday, what we saw was a relief rally, oversold. Some near-term bullish developments, technical developments, and the million-dollar question: was that the start of something new, as in a move up to near or even beyond the previous highs, or not? Right now, I'm leaning towards no. and if that changes, I will certainly let you know as soon as possible. To just wrap it up here, again, I said this earlier today. If you missed it, crude oil has traded almost perfectly correlated with the stock market. So my views on crude oil are going to mirror that on the stock market. So there's no reason to really update that. If the market drops, takes another big leg down, crude will probably do that as well. No guarantees. Gold has been catching a bid, which is showing a flight to safety. I talked about that this morning in reply to some questions. Oh, what a mess that chart is. We had a divergent high here that played out for a correction recently, but let me show you the GC chart. I'd have so many lines on here. That's not very clear to you guys. Ran up to resistance. So this is kind of aligning with, what I'm thinking on the stock market. If we either continue down lower and that's it, or maybe tomorrow after everybody gets home, because remember, the people that we're trading today are professionals. Those of you that sit in front of a computer all day and trade, the vast majority of money going in and out of the market, other than institutional trading. So you have mom and pops that get home from work today, or the retired folks that don't watch a market day in and day out, turn on CNBC and catch up, hear about the Fed rate cut. So if the masses think, oh my gosh, that's bullish, and if they've been conditioned over the last decade to believe that a rate cut is bullish, they could come in and step in and buy tomorrow. They can add to their 401ks, they can buy SPY, index funds, and that could drive the markets up. So I think tomorrow is going to be pivotal. If the buyers show up and start putting money in and undo today's reversal and take out yesterday's highs, this short trade it'll be stopped out because I set the stop on that below today's high, and it could very well open the door for another move up. If the buyers fail to show up, that's not a good sign. The Fed coming in with a 50 basis point surprise rate cut, and the buyers don't step in and buy it like they have the past many years, then we're probably going to take another leg down, and that's still the way I'm leaning, and hope to have more visibility tomorrow. So let's wrap it up here, and we'll pick up then. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.